You know, based on the profile, I can tell we have alumni pretty much all over the world, from the US, UK, India, Singapore, Hong Kong, and China. We really appreciate Alumni Office, CK, and Lanera to help us organize the Zoom setup. This is our third Zoom meeting. Turns out, even though there is a lot of inconvenience with the COVID-19 pandemic, we have to switch the alumni event to Zoom. However, it become a great way to reach out to worldwide alumni and be able to connect in a virtual way. So we hope all of you can enjoy. Coming up after this particular Zoom webinar, we will have a gaming industry overview on June the 7th and 5G event on June the 13th. So look out to your email for registration to those events. Today, we have the great pleasure to invite Francis from Rostandi Center and James from Danone to talk with us about impact investing. You know, part of my aha moment about why we should care about impact investing comes from my recent adventure. Just a quick introduction of myself.
Hi, Cindy, are you there? Yeah, I think Cindy has connection problem, so please bear with us.
Hello.
Hi.
Sorry, my internet had some problem. So anyways, let me quickly introduce Francis. So we have Francis Hong joining us from the Rostandi Center. Francis is the director for Hong Kong initiative of the Rostandi Center for Social Sector Innovation. He leads the center's programming in Asia. He's also director of Asia initiatives of the Yuan campus in Hong Kong. Before joining the university, he used to be a trust relationship manager with HSBC Private Bank. He also worked for the Hong Kong Jockey Club Charity Trust, the largest foundation in Hong Kong. And he's worked for the university since 2017. So Francis, please get started.
Yeah, thank you, Cindy, and thank you all of you for having me here. So I think it's a very good opportunity for me to learn about social impact and ESG investing. And I thought that it is probably also a good opportunity for me to introduce a bit about Rostandi Center. So I think most of you, both alum, would have heard about Rostandi Center for Social Sector Innovation. And we would like to think ourselves as the social impact hub for the Chicago Booth Business School. So I think having a social impact hub in a business school is a rather new and progressive thing for the both business school. And I think the history is that when you think about business school, when you think about economics, probably 40 years ago when Milton Friedman was saying that the business of business is business, whatever that means, there was a common understanding that business school is really about teaching people how to, for example, maximize shareholder value. But then I think the world has changed, and I think we are very proud to say that Chicago Booth is at the forefront of thinking about businesses and business school playing a very crucial role in contributing to a better society and a better world, and playing the role of making social impact, making impact to the world and to the well-being of humankind. And when you think about faculty in Chicago Booth, Rob Gertner, Marian Bertrand, J.P. Dubé, Pradeep, a lot of faculties actually are doing research and are teaching and are publishing papers that either talks about social impact of businesses or social impact of other organizations. So I think Chicago Booth is actually doing a lot in researching and promoting about social impact, and Rusandi Center is part of that equation, part of that ecosystem of trying to coordinate and bridge resources and interests in forwarding the social impact work for Chicago Booth. For Asia, thank you, Cindy, for introducing me. We are actually also doing quite a lot to promote social impact and social innovation in Asia. So one of the first programs that the Rusandi Center is running in Asia is the Hong Kong Jockey Club program on social innovation. And we are now towards the end of our third year running that program. And with that program, we bring faculty from Chicago to Hong Kong to teach nonprofits, to teach social enterprises about strategy, about business model, about operations, all the things that you have learned or that you have touched on when you are studying with Chicago Booth. And we also organized conferences that talked about NGO governance. Last year, Chicago Booth and Rusandi Center also co-organized an ESG conference with an organization called TBLI, short for Triple Bottom Line Investing, to run a 2-day conference on ESG. And we also presented a Booth alum panel that talks about responsible investing. And Rusandi Center in Hong Kong is also running impact investing workshops and webinars. The next one will be on May 28th, featuring Rusandi Center's impact investor in residence faculty called Priya Paraj. So I think the Rusandi Center is very keen on doing more things in Hong Kong, and Hong Kong is just a start. So we would very hope to use Hong Kong as a base, and with the experience that we have learned in Hong Kong, to expand our footprint to other parts of Asia. So we look forward to hearing more from you about your advice, about your suggestion of what else we can do. So Cindy has introduced me that I used to work for HSBC Private Bank. So being previously a banking person, I know that finance and investing is a very big thing in Asia. A lot of the wealth and a lot of the talents are in the banking finance industry. So I think the topic that we are going to discuss now, social impact and ESG investing, is of particular importance for Asia, because I think we can leverage the very big finance investing industry in making real impact to the world. So thank you for having me. It's good to be connecting with all of you. And I look forward to keep on connecting and discussing with you all about how Rusani Center can help you personally and in your business, in your professional life, or in your voluntary work, in how to expand the social impact that you are all making. So thank you very much. And can I pass the floor over to Cindy, please?
Thank you, Francis. We hope everything is safe on campus, and we hope to be able to visit Yuan campus again very soon.
Yes.
So just to give everybody a bit introduction of the webinar, because we set up this Zoom meeting as webinar format, therefore, for this time, you won't be able to see who else is joining the conference. But towards the end, we will unmute everyone so everyone can speak up and ask questions. And we're gonna try to make this a lively discussion. But in the meantime, during James' presentation, if you have questions, you can either leave towards the end and ask yourself, or you can leave the question to the Q&A tab. The Q&A tab is a separate tab from the chat room. So ask questions in the Q&A tab so we can see them and be able to, go through the questions. Next, I would like to introduce James. Part of the reason I went to James to talk about whether we can, discuss social impact investing is because from my work these days, I study a lot of limited partners from overseas, how they choose to invest in certain fund managers in China. One of them really inspired me by saying they really instill the ESG or social impact rules when they find managers, because they think by choosing a rigorous ESG guideline, they are helping the managers to find great companies in China, which in return be able to create a more sustainable future and society in China. So that's kind of my aha moment. And when I visited James in his office, we talked briefly and decided that we should, organize a dedicated seminar to talk about how Danone has been able to advance in the area of social impact investing. So let me quickly introduce James. James is a Malaysian, but he has worked and lived in China for a long time. He went to Booth in the year as AXP2, which is 2003. And he used to be the managing director of Carlsenberg, Greater China, and used to also work at Danone for a long time. Recently, he returned to Danone as vice president, Greater China, and also general secretary. You will hear about what that title means. It sounds very big. And so I will turn the microphone to James to have, James has spent a lot of time preparing a great presentation. I hope everyone can enjoy. And then after James' presentation, we will unmute everyone and discuss more about social impact investing. Thank you, James. James?
Can you hear me?
Yes.
Yes, hi. Hi, everybody. I hope you and your family are in good shape in this unprecedented time. And I know today is a Saturday, so my presentation will be more informal, to be a little bit more relaxed for everybody. So, So today, my presentation will split into two parts. The first part is the context we are in, the social disparity and environmental crisis. And then we know, I think the awareness is generally very high that there are a lot of issues on social disparity, and we are anticipating a backlash of environmental issues. So I think the main question is who should be responsible for it? So is it the role of government, the NGO, or the business community? So which institutions should be responsible for it? So this is the context that we are in. And also of late, there are a lot of discussion about the new purpose of company, what companies should do against the contemporary idea of shareholders' value maximizations. So the second part is my sharing about on Danone's adaptation to maximize its environmental and social impacts, along with maximization of shareholders' value. So which I will put into four compartments. First is the setting of vision, and then the strategic enablers and goals, and then how Danone have its actions being validated and measured. So, so I think from part one, I put in a picture about this skinny polar bear. I think it is a shock when I think all of us see this polar bear, right? So it is not just a polar bear, it's getting so close to mankind because global warming is affecting the habitat of animals, but at the same time, it's getting closer to the habitats of mankind. So as you can see, these are the 5 indices on the temperature. So over the last 30 years, we have seen the temperatures rising towards by 1 degree Celsius. So 1 degree Celsius, we can see has a huge impact already, as we see the Australian fire recently, and also all the serious melting of Greenland, Alaska, and heat wave, etc. So at the end of the century, a lot of experts are expecting the temperature will reach increase by 2 degrees Celsius. That means it is a huge impact to us because not just the temperature itself, the side effects are enormous. So the situation is getting worse. Is that if you look at the Greenland surface, the melting of the ice surface in Greenland. So over the last 20 years, so there are a lot of measures. If you look at the median, the middle value, the darker line, over the last 20, 30 years. So, and then the lighter colors are those quarter line. So the ranges, even you put at a much wider range as compared to one data itself last year, 2019 until June. You can see the steep vertical line outwards. So that means it's no longer follow the trend. So it's hard to predict now how the future trends looks like. So we can't extrapolate things in a linear way. So so this is the one of the ice mountain in the Greenland. I'd like you to listen to this sound. Yeah. So guess what sound is this? So this is the sound of the collapse of the whole ice mountain. So this incident happened in 2017. So while the statistics was measured in 2019, so you can imagine it is not far that we can anticipate more drastic global warming and the impacts on us. It is not just on the habitats, but also it affects the area that humans are densely concentrated. Because if you look at Mumbai, Manhattan, Shanghai, so these are all delta. So with a lot of resources, natural resources, water, assessment to water, economic activities. So that means what will happen is that if nothing to be done, 1.5 degrees Celsius increase will means by 2050 a lot of places will be sunk, and then by 2100 then the impact will be maybe 10 or 20 times much more than this. So and then a lot of area that experts are yet actually examined very closely on the impact of climate changes. One area is the pollination crisis. If you look at the bees, they're responsible for 1/3 of pollinating food supply. But today, of the 100 crop species that we consume, which accounting for 90% of what we eat, are being pollinated by the bees. So over the many years, bumblebees, for instance, reduced by 30%, mainly because of climate change. So when the temperature increased, let's say towards 46 degrees Celsius, what happened is that the beehives, the wax will melt. So the bees has a problem to ventilate the beehives. So the whole colony will collapse. So these are the new findings by some experts that these are the hidden impact of our food chain. So this research was reported by CNN just within this month. So some of the information I shared just now is so recent. So I think the question now is coming back to I think capitalism and free market, that some of the role, for instance, Jason Moore is a researcher on the environment and also the social justice. So what he sees is that the historical value relationships that produce cheap nature, right, including labor power, food, energy, raw materials, were well balanced. But this balance is being distorted now. So, so historically, I think capitalism were criticized for social inequality, especially in terms of income disparity between the top and the bottom of the society. But now it expanded to environmental issues. So let's just go back to the famous Milton Friedman. According to Milton Friedman, the role of businesses and the executives that they employ is to make as much money as possible. So that's the basic role of businesses. So they don't have to worry about the rest, as long as they deliver dividend to the shareholders. So the shareholders can do their charity by themselves. So, and the government can use tax to do something else for the society. So this is the specialization of roles that the business should focus on maximization of shareholders' value, which I think it has been so successful over the 30 to 40 years that people were saying the model is so elegant and efficient, which is true because it is the best ways of allocating resources that generating the prosperity that we enjoy today materially. So I think Lynn Stout, I think he wrote quite a famous book about shareholders' value. You can see here it mentioned very clearly that the Chicago school had pretty much won the great debate over corporate purpose. So I think at the bottom you can see his article is that the number of people who really care about the environment are a very small group of leftists who are more sentimental, follow their hearts rather than their heads. So the population is small. So I think his book was written in 2012. Yeah. So I think in 2015, Thomas Piketty, the famous economist from Europe, was quite popular. So I think you can see until now, also along with last year, what happened in the US, the supporter of Bernie Sanders, that the public sentiments are increasingly higher. The number of people that think environment and social justice are increasing. So this generates a lot of challenge to shareholders' value primacy. Interestingly, we also see some businessmen themselves, we call business social activists of the business community. One of them, I think, is quite obvious, is Benioff, the CEO and founder of Salesforce, Salesforce.com. So for him, I think he mentioned that last year, that he think capitalism is dead. So it's interesting because he is one of the beneficiary of free competitions, free market and competitions from the capitalism world. And of late, I think this is the famous, it's quite a lot of people talk about the JB Diamond, CEO of JP Morgan. He is the chairman of Business Roundtable. So he and 193 CEO declared the new purpose of corporations August last year. So it's interestingly because he acknowledged free market system is the best speed in generating jobs and stimulate innovations. And then the difference is that he added there is that corporation shared fundamental commitment to each of the stakeholders, for instance, employee, customer, supplier, community, and the environment. So this has stirred a lot of discussion. Well, I think a lot of people were quite happy with the statement because this is the statement you can see on the purpose of a corporation. So I would say it still maintains the fundamental belief of Milton Friedman and Chicago School that free market competitions is still the main driver, not the other model. But at the same time, each of the stakeholders are given more attention so that we have a much more balanced ecosystem, business ecosystem. So these are the signatures of the 193 CEOs. So including the CEO of Walmart, Johnson & Johnson, Johnson Controls, etc. So so I think they are some of the largest corporations in US. So as usual, the economists always hesitate about other than capitalism and free market. So I think throughout the last 40 years, we do not see shareholders value, a stakeholder values model works as compared to shareholders value. Stakeholders value had been promoted strongly in Europe, continental Europe. But at the end of the day, the question is, how can the banks, the government, the management, they are the representations, the agent for the shareholders. So if the stakeholders are running the companies, the purpose is not shareholders value maximizations. So how do you, the company shape its goals being questions. But of course, over the last 20 years, I think the triumphs of the shareholders value in US is very obvious. It works so well that it efficiently allocate all the resources. So the companies are performing much better than some of the continental Europe companies. So I think the economists actually put in a good questions. The first question is, who owns the company? So the CEO are the agent. They are not the owner of companies. So are the causes in environmental and social causes they are shaping agreed by the owner themselves? If not, who are going to invest in this company in the future? So this is very, very important questions that also questioned by Milton Friedman himself, that the owner should be the one behind. So this is first question. The second questions from the economists is, the CEOs are well-trained and gifted, talented in maximize shareholders' value, maximize profitability of the company, for instance, driving top line, free cash flow, increase margin, generate bottom lines. So are they good in driving social causes and environmental impacts, which are very different in nature? So I think these two questions from economists will generate more debates over the years. So a lot of people are waiting to see how the business roundtable that 190 CEOs signed on to work in the future. So I think when we look back what Milton Friedman mentioned, I think if you look at the yellow colored words here, that it mentioned that the role of CEO and executive is to maximize shareholders' value under the context of following the rules of the society, both embodied in law and also embodied in ethical customs. So then it generates some room for discussion, maybe some room for business community to maneuver. Because what is ethical custom definitely is something abstract, right? It's philosophical debates. Because ethical means what is good, what is bad, what is right, what is wrong. And it's also for different cultures. So this is something very abstract. So, this is an article posted in the Harvard Law School Forum, April, just last month. That there are some professors talking about the Milton Friedman's expression of ethical frameworks. So ethics will be something that people argue that it may create some opportunity for business to play a little bit more room on social and environmental without violating the basic approach of Milton Friedman, that you maximize your shareholders' value, and at the same time, you can do something that you think ethical within your cultural context. So this is an interesting trust barometer measured by Alumni, one of the world leading PR company last year. So I think if you look at these two grids. One is ethical and unethical. The other one is competency. So NGO is rated very high, ethical. Business are very competent. So I think if you look carefully at business corporations are not only competent, but they're ranked second among the 4 institutions in terms of ethical. So this generates enormous opportunity because an institution that is very competent, but not so bad on ethical. So if you put something upward vertically, so there are a lot of leverages. So there are a lot of levers within the business communities. So I think this is the survey of endowment on countries outside, mostly Europe and US. So integrity, purpose, dependability of these companies and corporations to the society is expected to be the very important lever to gain, to improve the trust of public on these institutions. Less on competency. That means business, you are good. Corporations are very effective, very efficient, very competent. So they need to improve the integrity, transparency of the operations. They need to have clear purpose. And then there have to be dependability by the community that they operate in or they serve. So I think even in China, so this is the questionnaire asked by Alderman in China, that the Chinese public also expects 82% of the Chinese public expect the businesses to contribute more to communities where they operate. So that means there are some expectation of corporations that have a little bit of a stakeholders value, where close to the market that you serve, more relevance to you. So, so that's the my first part of my presentations, that the context. So it's very clear that there are still debates going on, but it's very clear that the society is expecting from businesses, and the businesses has the capability, and then what the levers for the businesses are the ethical part of it. Right? So what I'm going to present next is the Danone approach. So so this is the one of the page I took it out from Danone annual report last year, 2019. So you look at the title is carbon adjusted earning per share. So it was the first time that Danone reported earning per share adjusted on a carbon footprint. That means this EPS is net of the cost of footprint carbon that Danone use, that carbon dioxide that Danone emission of Danone globally. So the meaning is that over the last 10 years, Danone as a company had embarked an effort to reduce carbon emissions. So in 2019, because of all the efforts being done, Danone, all the operations of Danone collectively reach its peak in 2019. So that means from 2020, there was the curve will start going down. So we're no longer growing up. So the burden is coming down. But of course, at the same time, Danone is pushing for carbon neutral. That means that we don't own the world the burden of being a polluter of carbon dioxide. We are reducing the burden, and in future we hope that we are neutral. That means zero emission in terms of all the efforts we do. So there are a lot of mechanism behind. One is reduce your own carbon emission. The other is you plant more tree to generate more oxygen, for instance, to offset what you did. So that's a net effect. So I think this is one of the milestone that the achievement of what Danone is. And then the way forward of this presentation you can see here is that we're going to focus on biodiversity and diversity, because what we see, this is the next important topic beside carbon emission. So I would like to very quickly to share with you Danone as a company. So Danone has three main businesses. So the first category is essential dairy and plant-based. So we are the world leading company in this category. So the total turnover is 13 billion euro. So some of the brands I think some of you may be aware of is Actimel, Alpro, Danone yogurt, etc. The second category is water and beverages. So we are the number 2 leader in volume worldwide. So some of the brands that you might know is Evian, mineral water. In China, we have Maizon, Maidong, and then Aqua in Indonesia. So, and also some of the other leading brands worldwide. So the third category is specialized nutrition. So with the turnover of 7.6 billion US dollar. So we have two sections. The early life nutrition for babies and kids, for instance, infant milk formula like Aptamil, and also snacks for kids like Happy Babies in US. So the other area of our specialized nutrition is medical nutrition. We are number one in Europe for both inpatient and also outpatient, for oncology, for allergy, for ICU, etc. So China is today. China is the number 2 market for Danone, the second largest, contributing 9% of the total turnover. The largest market is US. France is number 3. So 46% of our turnover coming from outside Europe and US. So so I think for Danone, the approach that Danone took on environmental and social impact is at very high level, at strategic level. So in 2017, we changed the logo. So we changed the visual. So you can see the kids, dark blue color, looking at the left. It's the same kids, but then he looked at the opposite side since 2017 with a lighter color. And then at the bottom of Danone, you can see one planet, one health. So I would say this is a pledge. So first pledge that we tell the world that we are the same person, but we look at the world differently now. It is not something new. It is evolving from dual projects. Since the family used to be a family-owned, Antoine Ribaud is from founding member of the family. So he started the dual track projects. I mean, business success and social progress. And then today we evolve into one planet, one health. It's the same concept, but then we visualize it, we institutionalize this vision. So this is the vision of the company. So in our name card, you will see One Planet, One Health that attached to our name cards. So initially, 2017, the pressure is less. You just tell everybody that I'm committed to One Planet, One Health. But today, 2020, the pressure is coming in because people will ask you why you carry this name card. Have you delivered anything against your pledge in 2017? So I think for me, I think my takeaway is that I think pledge always a good step one, a commitment, right? And then step two, you need to do something more than just a commitment. So today, the name card of our colleague, for instance, purchasing. So we're no longer like a purchasing manager. So we will add circular economy and purchasing manager. That means those who want to take up a job as a purchasing in Danone, he needs to be an expert or someone care about the environment. So because his title is circular economy and purchasing manager. So therefore he has additional role that related to environmental impact. So I think these are cascading gradually. So what I'm trying to share is that always good to have a pledge first, but then how do you deliver the pledge? It is a second step, right? So, and then now I'm sharing the Danone goals. So unlike P&L, maximize shareholders' value is very tangible and simple, right? You maximize free cash flow, for instance. Maximize, improve your top line, market share, improve your margin. Then all this will deliver into your bottom line, reduce capex. So this will enhance your share prices in the capital market, for instance, in the share market. So, but for social and environmental goals, these are very different. The time it takes is much longer. It's not quarterly result or yearly result. Like for instance, reduce carbon emissions. There's some projects that we went through, it took us maybe 5 to 10 years. So the time duration is different. And also you need to have clarity in your goals. So what we took is that we picked, these are the 17 universal goals developed by the United Nations in 2015. So it is quite universal values in nature because it's collectively agreed by 190 members. So you have a lot of social and environmental themes in the 17 blocks. For instance, no hunger, poverty elevation, safe water, education, social justice, gender equality, life below water, life above water, life on the land, for instance, green energies. So there are a lot of things that you can pick on. And these are all a very big theme. So what we do is we select some of this theme and then make it into 9 goals. And then we put in a timeline that reasonable to achieve this goal, 2030. So from 2017 to 2030, that means you have 13 years to achieve these goals. But of course, then you have different milestones to measure these goals. So of these 9 goals, we are dividing them into 3 compartments, right? So the first, the dark blues are the business model. That means how the business operates, runs in a sustainable way. And then the green one are the brand's model. So how the brand's equity, the brand's value integrate social and environmental values and courses. And then the third one is trust model, where you engage and integrate your employee, your partners, the community, NGOs, and the expert to work together to drive some of these goals. So, so therefore you have three compartments, yeah, business, the brands, and the people and partners. So for instance, a business model. So we have a lot of businesses, so they can apply to certify as a B Corp. I will come into later about what is B Corp, or they can choose sustainable growth, innovation. So it's really up to them, are they ready or not at this moment, because they have 13 years to select the goals that fit them. So how do they select those goals really depend on their current performance, the resources available, the capability of the organizations. So if, for instance, if they are not doing well, so better spend all their time to improve the P&L instead of focus too much on other area. But for those who are performing well, they have a lot of resources, they have the capability, then they can be more aggressive on environmental and social causes. So similarly for the brand, I think it's important that the brand in future, that today a lot of brands has different positioning, have different brand values. So I think for the next generations, it's very clear, right? Environmental, community, social justice must be part of it. So all the brands can select some of this value, and then at the top of my presentation, you can see there are different goals that you can select from the SDG of United Nations. So like for instance, if it is a water brand, then they can say water conservation. I'm selling water. So water conservation is part of my brand, right? And then the bottle you use plastics, and circular economy and recycling of packaging is part of my brand model. So it is not conflicting, it's enhance and enrich the brand strength. So this is the brand part. And then for the trust model, so is how we work with our partners. For instance, if you have a lot of the channels, distributions channels, so for instance, some of the pop and mom store, smaller distributors, they are part of your community. So you can train them and support them. So this is part of the, you work with them as part of the ecology. So I think the other area are supplier, for instance, and also partners like universities, NGOs, the experts. So we can collaborate on this because we are not specialized on environmental, some of the technical area. So we can have all our partners to support us. So last year for Danone, we actually allocated one share for each employee worldwide. So that all employees are shareholders now, and they can buy their shares also. So and also they can send their representative each year to the global board for discussion and voicing up their view. So I would say this is the baby steps that encourage empowering the employee. So I will not go very in details on some of this. I will go very quickly the projects that we do, like for instance, health. So we have a lot of projects like increasing more choices, better eating habits. For the planet part, we have climate, water, circular economy, agriculture. So these are the sub-theme that individual businesses can choose and focus on. So for Evian, for instance, it is a mineral water. So its catchment area is being conserved. So over the last, I think 15 years. So today, Evian is carbon neutral. So from now onwards, Evian will be negative carbon. That means Evian as a brand and all the operations are no longer the burden of the world. It starts contributing positively by having a negative carbon footprint. So this is what it's achieved today. And then Evian is is planning over the next 5 years, by 2025, that all the packaging it uses will come from non-virgin material or recycled material. So that means in future, you will see Evian or move towards like a brand that acts like an activist for environment. Right? So for social inclusion also, we have a lot of projects like helping out the poor community worldwide, and also social inclusion. So for China, we work with a lot of NGO and set up social enterprises. So social enterprises is not charity. It is like run like a business, right? So we sell our product to the poor family, that making sure that the kids has the basic nutrition, but very low affordable price. So obviously it is not making money, but it doesn't lose money also. So over the years, as the business expand, the losses will reduce, so that normal business may take 3 to 5 years payback, right? But for social businesses, it may take 15 years. And one day, if this business is making money, it won't deliver dividend, but the money will be plowed back for expansion. So unlike NGO or donation that we keep pumping in money, or unlike businesses that we deliver dividend, social business is something that we generate profit, but then no dividend is given out. So that kind of dividend will be plowed back for organic expansion. So therefore, I think this is interesting because this model is much more sustainable than like charitable model, for instance. So I think one very interesting about Danone is that it has humanism as one of its corporate values. Not many companies dare to really put this in because it's quite challenging, because you need to deliver, you need to compete, and at difficult time you still need to do downsizing. But one thing good is that when you make hard decision, but you have to really feel empathy. What happens if you downsize? What kind of impact to the employee? Put yourself into that shoe. So I think this value is very important anchor to all the decisions we make, and even hard decision at times. But you have to put in a lot of human thoughts. The hearts, the feeling need to be in. So, and all the social and environmental results are being measured. So this is from our annual reports. So on the top is P&L, maximize P&L. And then at the bottom, you can see here is the social and environmental results. Like for instance, last year, 90% of our products are healthy category, in healthy category. And then we reduced 24.8% carbon emission last year. 1/3 of our businesses are registered as B Corp, and 81% of the packaging are recyclable. And then B Corp is a non-profit organization from the US. So it is a very stiff, demanding organization on measuring the impact of social and environment. It creates audits and all this. So what Danone is doing is that we want all our business unit to be audited by B Labs and certified as B corporations. So today, 1/3 of our companies are being certified. So we plan to have them all done by 2030. So, so as you can see, those companies certified by B Corp, like Patagonia, Ben & Jerry, these are ethically very respected companies on their humane or their ethical or their environmental causes are very strong. So for China, I think we see also a lot of opportunities because China has committed to Paris Agreement to reduce 65% of the carbon emission over the end of this century. So peak of carbon emission is expected 2030. And it has the vision and support from the top. So Beautiful China, 美丽中国 is a strong commitment of the country. So, and I think last year, many of you knew that Shanghai actually came up with regulations on garbage sorting July last year. And then Beijing started 1st of May this year, despite COVID-19. So the commitment are there, and 40 cities is going to roll it out. So this is the strong indication of waste sorting regulatory landscape changing. So I think this China offers a lot of excitement, I would say, because globally it committed to climate forces, and then locally a lot of regulations are being ramped up, as you can see here, and also the public in China. If you look at this survey done by Alumni on COVID-19, so the public wants brands to express empathy and support for those affected by the pandemic. So, and then amazingly, you can see that 76% of Chinese think that a brand who take advantage of the pandemic or didn't behave appropriate should be punished, compared to average of 33% in 12 countries. So 76% against others. So, and also during COVID-19 lockdown, the second highest reason for going out during lockdown is sorting, throwing garbage, and eating at home. So the people start eating more at home, eating with the family members. They do cooking. They get very close to the sources of foods. They prepare foods. So these are all very important to get the Chinese consumer really have an understanding about food, rather than so detached previously. So, and I think a lot of talk now on the prohibiting wild animal trading and consumption. So the fishes at your left-hand side, you can see these two fishes, and I think altogether 17 fishes are not allowed to be eaten in Beijing beginning July. So I think a lot of discussion now in Beijing, in National People Congress, to prohibit trading and eating of wild animals. So these are already being escalated to the highest level. So I think COVID-19 actually bring in a lot of opportunities in China. So I think for Danone, I think first, I think it's important to nurture the volunteering part of our employee to be volunteer to the environment, to this community, outside the company. So as long as the employee, they do community works outside, they don't have to come to the company. So we pay the salary. So every year we are targeting around 3,000 to 4,000 working hours of our employees contributed to the society. So I think before I end, I would say that a company like Danone alone, we won't make it happen. We need to do it together with our partners, with everybody. So a company alone is just not able. So it is a collective effort. So I think what I hope is that in future, I hope that to have more discussion with the alumni of University of Chicago and all the friends in the NGOs, people are interested in volunteering, to work together with experts to push this agenda further. Because climate change is not just climate change, but it is everything change. So thank you so much. Thank you.
Thank you, James. This is very, very insightful, and it's very much Chicago Booth approach as well. A lot of data, very analytical. I'm very impressed by how Danone is so visionary and also committed to the impact investing space. There is one sentence on your presentation said by the CEO: each time we eat and drink, we can vote for the world we want to live in. You know, Danone is not just saying it in a logo or as a slogan. It's truly delivering what you are saying. And you know, just as some research, BlackRock actually has switched their investment strategy to sustainable investment and has raised a fund over $1 trillion in sustainable investment. And they actually come up with 15 descriptors, which really go across not just climate change, also gender, you know, equality, a lot of factors. You know, if you are curious, if everybody is curious, you can easily search the BlackRock descriptors on sustainable development. And I would also encourage you to search on Youku about Danone CEO's speech. He's very inspiring as well. So I can see now there are questions coming in, James. One question is from Yongkai.
Hello? Sorry. Sorry, hello?
Hello?
Oh, it doesn't matter. I think the Wi-Fi got problem.
Hello?
Yes, Cindy, you can speak.
Are you there?
Yes. Cindy, can you speak? Hello, hello. James, you have to unmute yourself.
Discuss? No?
Hi.
Hi. Hi, James.
可以啊，你拿过来。他们不知道什么，上次也是有technical问题。
Okay, we can hear you now, James. Do you see the Q&A tab?
Yes.
There
Okay,
are two questions
yeah.
posted there.
Yeah.
Okay.
Yep. Sorry. Yeah. From Kai Wong, how does a company justify its efforts and investment in social business? Is this challenging times like now? How does one justify such investment that we will need to drive stakeholders' value? I think this is a very important question. First of all, social business is a unique combination, a hybrid model of NGO and businesses. That means we use business competencies, running like a business, but not offering dividend, the dividend plowback. So what we did was 10 years ago, we invested seeding funds to a social business NutriGo. So the first payment, after the first payment made up, 5 to 10 years later, now we are about approaching break even. So therefore, unlike donation that is affected by business cycle, when you have difficulties, then you stop your donation, for instance. But for social business, you are still able to contribute because the business itself is self-financing, self-generating resources, except that the payback period is much longer because the price is, the products are sold at much lower price, affordable to the poor customer. So in this area, it is much better than charitable courses where you keep on pumping money in, because for social business, the money that you pump in is reducing over the year, and then it may start making money if the business model works well in 5 to 10 years from now. So I think this may express answer that a social business model can overcome the cyclical pressure, economic cyclical pressure of a normal business operations. So for the second questions is, I have a questions regarding ethics for corporations. Some people told me that companies shall survive and make money first before they can take care of the society. Some people reminded me that to be flexible, ban some rules as competitors are not strictly observing ethical norms. It seems to me to stay ethical and bringing positive social impact can be expensive. I think this is very good questions. Like for instance, Danone, we have competitors. So if you spend a lot of your time, resources, financially, and other resources into environmental and social causes, how can you compete effectively? This is definitely a big challenge for us. That's why we are proposing like a carbon adjusted earning per share, because there is a cost in nature, right? So the world cannot operate, cannot sustain like the model that we have. We are facing flaws in the traditional capitalism world. So the first step we are taking is that we want the investment community to acknowledge that Danone has done more than others, so that our EPS is also carbon adjusted, environmentally we invested on it. So that should be recognized, and then in future, as the investing community and the financing communities, for instance, over the next 10, 20 years, we see a lot of young people will join the financing community. So the awareness of green financial products will be there. So then we should be rewarded, for instance, cost of capital, right, which is cheaper than our competitors because we do more on this. So I think this is not one company effort. It's also depending on the whole ecosystem of the capital market, for instance. And the second answer, I would say that I think it really depends on the leaderships and the culture. So for our CEO himself, I don't think he's one of the highest paid CEO in Europe. At the same time, like for instance, yesterday he announced that he will cut his salary to increase the insurance coverage for the COVID employee. And then the whole board of Danone, this year, they are going to forego their whole year remunerations and packages and contribute for a fund and that support COVID-19, for instance. So I would say that these are the values that drive the company. This is the personal commitment beside the business commitment. And Danone also committed to offer dividend this year. So we are not like some company that withhold dividend. We contribute dividend, we find other resources on it. So we are encouraging employee to do it not just for the company, but for themselves. Because I think it's no longer a debate like who should do it. Someone need to do something. Otherwise, I think 2050 to 100, our next or another generation will not be able to see the world that we see today. It's not really not sustainable. And it will be more worse than COVID because if something is extinct, it will extinct forever, right? So this is already so obvious in front of us. Yeah.